Good evening, everyone. I'm certainly sure you can hear me from wherever you are tonight. Please, if you can hear me, just give me an high five so we can kickstart the teaching tonight. Okay. All right, Sunday James, you are welcome. Who again can hear me? If you can hear me clearly, just let me see your hands up. Okay, thank you, Mavis Adenuga. Thank you. You're welcome tonight. Emmanuel Okechukwu, thank you. Taufik Olelekon, thank you. You're welcome. Thank you so much. Clearly, I can see all of your hands, and you are hearing me clearly tonight. Well, quickly tonight, we shall be looking at another standard, and that is IS 12 income statement. We have a lot of new persons that are joining us, so we are picking up this very topic for the sake of those that are joining us from the scratch, so that we can seamlessly move through the lecture tonight. Tonight, like I said, we are looking at IS 12, and that is income taxes. And then when we talk about income taxes, is the normal income tax that we also know, which of course is being remitted to the tax authority, that is to the government of the federation through the tax authority. Now, when we talk about income tax, we are talking about a standard that is known as IS 12, which guides how income taxes should be operated. And the objective is to prescribe the accounting treatment for income taxes, ensuring that entities recognize and measure income taxes in a consistent and in a transparent manner. That is the objective of setting up this very particular standard. Like I said earlier, income taxes is the same tax that the tax that a company pays, or any trading entity. The tax that they pay to the government is known as income taxes. So understand that the same income tax that is the same income tax that we are looking at tonight. And I told you, whenever we are looking at any standard, we'll start with the definition, and from there we move to the measurement. From measurement we move to the disclosures and the presentation. So quickly tonight, I don't want us to take more time. Income taxes is one of the standard you will always see whenever you are doing or looking at anything that is related to financial accounting. Right from as long as you are preparing an account for any company, certainly the company is expected to make profit, and once you make profit, you are expected to also pay tax to the government. But it's important for everyone that is preparing such account to be familiar with everything that is required in order for us to, make the most of presentation, as it were. So, quickly tonight, let's run through the definition. What are income taxes? But before we proceed, it's important to also, so that we can have a seamless understanding of this standard, for you to understand that we shall be looking at these income taxes in two headings. We shall be looking at the current year tax, and we shall be looking at the deferred taxes. And this to say, IS 12 cover two main taxes that you will always see in the financial statement, and that is talking about the current year tax and then the deferred taxes. So therefore, if you have your pen, that is what we shall be doing tonight. Now, let's quickly go through, look at the current year taxes. The current year taxes. By definition, the current year tax simply implies the actual amount of taxes that is payable to the tax authority, that is payable to government through the tax authority, or a recoverable amount statutorily that is required, statutorily for you to remit to the government and through the tax authority. In other words, taxes simply means a portion of your profit that you made from your trading activity that you are expected to remit to the government in order for government to, judiciously allocate resources and provide other efficient utility that is required by the populace. So, therefore, every company is expected to contribute certain percentage of their earnings, their makings, to the government, and so that everybody can, at the end of the day, have a good life, as it were. And so that is that for that. The current year taxes is just the amount of taxes that you pay having engaged in a trading activity within a financial year to the government. It's as simple as that. It is the current tax that you pay as an entity engaging in any trading activity to the government of the government of where you are trading within a financial year. That is as simple as that. Nobody will ask for the definition, just know it as it. So recognition, let's quickly move to recognition. And then when we talk about recognition, we're talking about how it is being recognized on the financial statement. And so current year taxes are recognized as an expense, first as an expense in the statement of profit or loss, and then it is also recognized as a liability in the statement of a financial position. In other words, you will see it being debited to the statement of profit or loss and credited under current liability as a liability which an entity have not offset, but of course we are anticipating that you are going to make that payment within the next financial year, and that is why that you have removed it this year, as it were, from your profit. You are expected to keep it somewhere because it is a liability, as it were. You have not paid it. You are not, most often when you deduct your taxes from your profit, you don't pay them immediately. Of course, there are approvals that you need to get maybe from the board and the likes, and maybe an auditor need to do some work and the likes, before you pay those taxes. And so, certainly, most often, when you deduct your taxes from your profit, you don't remit them immediately. And the tax authority, or by regulations, you are allowed to pay your taxes on or before the 30th of June of the year following your current financial year. In other words, if your financial year runs from January to December, you are allowed to file your tax or pay your tax for the current year before the 30th of June of next year. So now you know that if your financial year runs from January to December, you cannot pay. Most often people don't pay their taxes on the 31st of December. That is certain. So if your financial year ends on the 31st of December, on 1st January of the next year, another financial year has occurred. So it is anticipated that you are going to pay that tax within that financial year, and that is why, being an expense that you deducted from your profit, that is, you debit your profit or loss account, it is expected that you credit it under the current liability, being an amount that you are going to remit within the next financial year. I hope you understand what I'm trying to explain. I'm just trying to explain why you have it as an expense in profit or loss, and why you have it as a credit in a non-current asset a current liability in the statement of financial position. So that is that for that. I hope that is understood and that is taken down. Now quickly, let's go to the next item that talks about measurement of current year taxes. Measurement of current year taxes. How do you calculate it? We have just two main steps that you need to follow. Two steps that is required for you to follow in calculating your current year taxes. Step one is for you to determine your taxable profit. Your taxable profit is different from your accounting profit. Your accounting profit, has an element of tax disallowable expenses. In other words, most often, for you to arrive at your accounting profit, you have considered some allowance, some excess expenses that the tax authority or tax regulation do not permit. A good example is your depreciation. By law, depreciation are not recognized as an expense. Equally, by law, provisions that do not meet the stringent requirement of being highly probable do not also meet the regulatory requirement of being recognized as an expense. We have a lot of them. So therefore, understand that your accounting profit is not the same thing as taxable profit. However, these are the steps to follow in determining your taxable profit. This is how to do it. Number one, identify your accounting profit. Once you identify your accounting profit, less from this accounting profit non-taxable revenue. You less non-taxable revenue, add back disallowable expenses. And once you're able to do all of these, what you will arrive at is known as adjusted profit. Once you're able to get this adjusted profit, less relief, that is tax relief that has been given to you, or waivers that have been given to you, as well as tax laws. That is, if you have loss in the previous year, tax regulation allow you to carry it in the present year that you make profit, to less it and before you take your tax, as it were. Then you're also allowed to to remove a capital allowance from the adjusted profit, and what you have at the end of the day is known as a taxable profit. Taxable profit. It's as simple as ABC. So once you're able to determine your taxable profit, that is the step one. Step two is you multiply, that taxable profit with the current the tax rate that has been given to you. You multiply by the tax rate that has been given to you. It's as simple as that. So therefore, the simple way to understand this is, in summary, current year tax is equals to taxable profit multiplied by current year tax rate. It's as simple as that. So once you know all of this, you can deal with any question that they are giving to you to always deal with. Now, importantly, you should understand that you likely may not see this kind of question as an isolated question in your FR or in your CR, as it were. You may not see it as one big question that they will ask you. But definitely, when you are computing under published account, this type of question will always come. Your published account, your group account, there is no way you won't see this type of question. It is certainly going to come, that you will be hard to determine your current year taxes. But once you see it that way, just understand that if they give you the rate, that is how to do it. Multiply by the taxable profit, and then you get your current year taxes. Quickly, let's look at this example. I hope we are following. We are still together tonight. Please, if you are together, just give me a high five so that we proceed. If you are still together, please give me a high five so that we can proceed tonight. Are we still together? Can you? Thank you so much. Thank you so much. Thank you so much. Thank you so much. All right. So look at this. Let's look at this illustration. Onigbinde Gold Limited, a company that is based in Ibom. A company that is based in Ibom has just as the following information for your consideration. Onigbide Gold Limited, a company based in Ibom, has availed you the following information for its current year operations. Revenue for the year is 270. Admin and other allowable expenses 138. Accounting depreciation 11. Profit before tax 121. The IFRS has granted the company 15,000 allowance, that is 15 allowance at a tax rate of 30%. Require determine the current year tax for the current year tax for the current year. Very simple. Once we use the step that I told you earlier, you can easily do it. Now I told you the formula is as simple as ABC. Is your taxable profit multiplied by your tax rate. Very simple. Now for this question, if we are to determine our taxable profit, like following the step that I gave to you, I said we are going to first of all determine the solution. Now solution, we determine first one, determination of taxable profit. That's what we do first. And so from this question, we were given accounting profit. So let's write item, and then we have amount. Okay, amount in naira, and then we have 3 zeros. So we have item 1, we have accounting profit. Accounting profit is what, please? What is accounting profit? Are we still together? What is the accounting profit, please? Can you all hear
Yes, sir,
me?
we did not screenshot it. Yes, sir. Maybe you should allow us to screenshot it so that we'll be able to call it.
Okay. Okay, this is it. You can screenshot, please. Onigbide Gold Limited, a company based in Ibom, Nigeria, has availed you the following information for current year operations. Revenue 270, admin, accounting depreciation, profit before tax 121. From this question, do we have accounting profit? We have
Yes,
profit
sir,
before tax. Do we have accounting profit?
Yes, sir.
What is the accounting profit?
Yep. 121.
Profit before tax.
Is profit before tax your accounting profit? Somebody
Yes,
should
sir.
answer me.
Yes, sir.
Raise your hand. We are in an egalitarian society. You raise your hand before you talk. Raise your hand, we'll call you, you talk. Are we still together? Okay. Charity Nathaniel, please, you are raising your hand. Give me an answer. Is 121 our accounting profit?
Sorry, I didn't raise my hand though. That's hand raised up before was when you said we should give a thumbs up if we are following.
Oh, yeah,
But anyway,
Charity.
I agree that is the accounting profit, sir.
You agreed? Okay, thank you. Any other try? Any other person try it again? Olamilokun, is that our accounting profit?
Yes, our accounting profit is profit before tax 121.
I disagree with all of you. I totally disagree. Now let's go. We have to determine our accounting profit. And our accounting profit, let me just put it in bracket here. We were told that the profit before tax is 121. And we were told that there is a tax rate of 30%. Multiplied by 30%. What do you have? Please, quickly, please. I didn't know what happened. I think I started the class earlier than, as in I sent this thing earlier, and it's telling me it will time out very soon. So please, let's quickly do this one before we go and create another link for tonight's lecture. Are we still together?
Yes, sir.
Okay, so let's determine the accounting profit. 191 minus multiplied by 30% will give us what, please?
36.3.
36.3. Now, our accounting profit will be equal to 121 minus what is this one? 121 minus 121, that is minus tax now, and our tax is let me just put it directly, 36.3. Now when you see this question, you see that it's very cheap, but at the same time it is very, very technical, highly technical. Our tax is 121 multiplied by 30, which is equal to 36.3. Our accounting profit is 121 minus 36.3. What will it give to us? Are we still together? Are we together, please?
Yes, sir. 84.7.
84.7.
7.
Yes. That is our accounting profit. Do we all know how we got that?
Yes, sir.
Thank you so much. So, we have gotten our accounting profit. Let's go back to that step 1. Under that step 1, I told you that you can screenshot it. This is step 1, accounting profit less non-taxable revenue. In this question, there is no non-taxable revenue. Add back disallowable expenses. In this question, do we have disallowed expenses? Raise your hand. We'll call you to talk very quickly. Raise your hand, please. Charity, go ahead. Or you drop down your hand so that I will not be calling you. Okay. Saudana, please, go ahead.
We're having accounting depreciation, sir.
Accounting depreciation, and that is a non-allowable expense. Thank you so much. Please help me clap for her. I'm giving you 1 mark for answering the question. 1 mark. You are looking for 49 to pass. You not claim it. Please claim it, though. So therefore, thank you.
Sir.
All right. So now we said we should add back our disallowed expense, which is accounting depreciation. What is our accounting depreciation? Anybody there?
11.
11 is our accounting depreciation. So where do we have any other disallowable expense in this question? Are we together?
No, sir, we don't have.
We don't have. So what do we have? When you have this plus this, what is the total? And what is this profit called? Who can help me out? When you have this, thank you so much. Thank you so much. I'm giving you 2 marks. Please claim it. 2 marks. 2 marks have been given. I'll give you 2 marks. Please claim it. Because we are looking for just small amount of this thing to. So that is that for that. Adjusted profit, please give me what is the answer?
95.7.
95.7. Do we have all these people that are just joining us? You are disturbing us, so mind yourself. Oh. We told you people to join early. You did not join early. Thank you so much. Please, let's go ahead. Our adjusted profit is, please give me that figure again. Adjusted profit is 95.7. Now, let's go back to our steps so that you can understand it. We say add back disallowable expenses. What you have is adjusted profit. Let's relieve. In this question, do we have release and tax loss? No. Do we have capital allowance? Let's check. Okay. FRS have granted the company 15K allowance at a tax rate of 30%. 50K capital allowance has been given. And what do we say you should do? You should less your capital allowance and from there. So what do? We less our capital allowance. Are we still together? Less.
Yes, sir.
Those that are offering tax, I'm sure this will not be strange to you. Less capital allowance. If you have done company income tax, this will not be strange to you. Those that are also okay, all my people that are in a professional, that are doing SFM, I'm sure this also will not be new to you. So what is the capital allowance? That's 15. So we have to less this 15 from the adjusted profit. And when we less it, what do we have? Are we still together?
80.7.
81.
80.7. 80.7.
Approximation to 81.
Taxable profit is how much?
80.7.
80.7. So my good friend Charity that said the accounting profit is 121. Do you now see that it's not 121?
Yes, sir.
Thank you so much. So that is that for that. We have gotten our accounting profit to be 80.7, which is our first step. Then the second step we say our accounting profit, taxable profit multiplied by the tax rate will give us the what is it called? The current year tax. It's as simple as this: 80.7 multiplied by 30% will give us how much is that? The current year tax.
It's 24.
Which is how equals to what? 24. This is how it is. Now, let me take you back a bit. I have done two things together in this question. Number one, I've been able to determine accounting profit. Number two, I've been able to determine the tax when you consider disallowable expenses. Meaning we have what we call accounting taxes. Now let me write it down. We have accounting taxes, that is when we prepare our when we are to determine our accounting profit for the year, we got the accounting profit for the year. Is that not so? Are we still together? Okay, Joy, you are raising your hand. Are we still together?
Yes, sir.
Okay. So we got that. We got 36 as the accounting profit. Is that not so? Now, when we adjust the When we adjust for the taxable profit, we also got 24 approximately. Is that not so? Is that not so? Are we still together, please?
Yes, sir.
Okay. Now, if you see there is a difference, one was 24, the other one was 36. These kind of differences will always bring about what we call over provision or under provisions. Are we still together now?
Sorry,
In
sir,
other
I want to
words,
ask a question.
go ahead, please.
Sir, if the accounting profit that we are letting tax, I think we should add back the 30% because I believe they might remove it from the profit.
You should add back what?
So I don't think the first 30% is removed from the accounting profit
Yes.
because it will be like a deduction, not additional. It will be a deduction from the profit.
Did we add it?
We supposed to add it, but we less it because they
Why are we
deduct.
going to add it now? We will not add it. We are going to less it now to get our accounting profit for the year.
Okay.
What we had was profit before tax, which was 121. Is that also?
Okay.
Uh-huh.
Yes, sir. Yes, sir. I get it, sir.
Uh-huh.
Yes, sir.
Okay. So I'm sure we are still together. Please let me. This is just how it happened. That's how to compute your current year taxes. I will create a link and I will send it so that we can quickly join, and we start. We check. We look for. We check that our current year. We go to that provisions, over provision and other provision, and then we go to deferred taxes. Tonight is the night. We are going to enjoy ourselves. That I can assure you. We are going to enjoy ourselves very well. So please, I have sent the link now. This very particular timing will be over in a few seconds. Please quickly just be joining, and we are going to start all over from there. Thank you so much for your time. We'll see you again in the next few seconds.